Hello everyone, this is today's video analysis for September 5th, 2018. Today we're taking a look at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis. Looking here at the daily time frame, we have seen a bit of a retracement from the downward move we've seen for the US franc over the past several weeks. We've moved from all the way up here at the top of the chart, 1.0065 area, all the way back down to 0.9660 area, the orange shaded area in the middle of the chart. So it was falling over the past several weeks. The past 2-3 days, we have seen the market pushing back higher. So a little bit of a retracement of that downtrend. The retracement of the downtrend gives us an opportunity, if we're going to go short within the downtrend, to go short at a higher level. Let's zoom it in one time. So as we see the downtrend, of course, we see it retracing back higher, especially yesterday as it pushed back higher into the 97.4560 level, the yellow shaded area here on the chart. I took Fibonacci from the highest high to our current low, and we find the 0.236 or 24% retracement level of that range sitting at 97.50. Right here in the middle of this yellow shaded area. So it's clearly come up yesterday, finding resistance here at this yellow zone, and today also finding resistance here at the yellow zone. So as long as it stays within and under there, we've seen that retracement, and it becomes an opportunity for us to go short, sell in the direction of what was the downtrend. Now, as we create higher lows and higher highs, that may change the picture a little bit, but right now, I think still selling in the direction of the trend is the main focus that we should have for the dollar franc, especially as it finds resistance underneath that yellow shaded area. The risk here is, of course, that the market continues to pressure higher, pushes through the yellow zone 97.60 and pushes back up into the next resistance level, which happens to be 97.90.98 here at the pink shaded area. Of course, targets for this pretty easy to see. We would first target back down to the blue zone, 97.15.97, and then beyond there, we're going all the way back down to the ultimate low, back into the orange zone, 96.60. As we take it down here to the 4-hour time frame, we can see the market clearly finding resistance underneath this yellow zone over the past several hours. Yesterday, we saw the market challenge above 97.60. In fact, it was about during the trade room, we saw it trying to challenge above 97.60, and now it just came right back down. We see this smaller body with the long wick on the top, implying that we had a infusion of sellers. There was a sudden infusion of sell orders because at one point that was a big blue candle, then it became a smaller candle with a long wick on top. We have this infusion of sell orders, and the market now finding resistance at this yellow shaded area. So the expectation is, as long as it's underneath there and finding resistance, that we'll look for the short opportunity. Our stop loss, of course, originally will be above this last high. That way, if it does break above, we have limited risk. In fact, the risk is fairly small. If we just look at the 97.45 level, bottom of the yellow zone, to the top of that candle, we're only looking at about 20 pips. So you're only looking at about maybe a 25 pip stop loss if you dive into the short underneath the yellow shaded area. So it's not very much risk. And then, of course, we're looking to target back down to the blue zone, which is about 25 to 30 pips, which is a 1-to-1 risk reward. But if we can see it break the blue zone and go back down to the orange zone again, that becomes a much better risk reward for the shorts here. And again, the risk isn't very large. If it breaks above the yellow zone, we get out, we look for a new opportunity for it to go back up. Look at the black circle back here. We see support on top of there, so that support becomes resistance later on, and that's what we're dealing with right now. Again, there's that 236 fib sitting at 97.50 right inside the yellow zone. So again, as long as it stays underneath there, I think there's a chance that we look for it to head back down to the blue shaded area or lower. The risk is a break above the yellow zone, and we'll look to get out and look for new opportunities for the franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.